Hello again. In this video, we will be finishing our discussion of what are stocks. Certain brokers have minimum deposits for opening accounts with them. Alternates don't. For instance, the last time I checked TD Ameritrade, they have a $2,000 minimum to open a value record. Trade King and Zecco don't have minimum levels. So the more cash you have for investing, the more decisions you'll have, the more options you'll have. On the other hand, knowing what amount you're ready to invest from the beginning does save you some time. And here, all you need to know and all you need to do is a little online exploration. You can find everything you need to know. I might encourage you to do this yourself on the grounds that these minimum accounts, they're known to change. Above all, award the choice of either having a provision structure sent to you or permitting you to round them out on the web. Print them and send them in with a check. The method is simple and can be finished reasonably fast at essentially all banks and financial institutions. When you've opened a record, you have the capacity to begin investing your cash. All businesses give you the choice of setting up mechanical monthly withdrawals, which will exchange and measure to you directly every month from your reserve funds or financial records to your financial record. This could be a straightforward route to begin advancing your equity. After all, if you don't see it, you won't use it. Since you won't recognize the cash that is missing every month, saving becomes simple. There's a plethora of discount brokerage houses out there and numerous full-service firms. In spite of the fact that there's no lack of decisions, not every decision is suited to each taste or each necessity, so you do need to specifically decide on what best suits you. By and large, as with your investment arrangement and methodology, you should choose what sort of broker you require. Here's a general portrayal of the utilities offered by a full utility or discount broker. Depending on if you choose to open a record with an accepted business firm, you'll work one-on-one with a private stockbroker. This individual will give you transaction plans, they'll get ready reports regarding your portfolio, give you a rundown of how well your transactions are getting along, and regularly be ready by telephone call or message to purchase or sell stocks, securities, shared trusts, or different ventures for your actual account. Furthermore, conventional merchants offer a mixture of distinctive research origins to their clients. In return for this one-on-one aid and direction, you will be charged a higher fee, and we'll talk more regarding the value thought in a moment here. A couple samples of this sort of firm are Merrill Lynch, which is presently part of Bank of America, Morgan Stanley, Smith Barney, and Wells Fargo Securities. I may as well focus on that large portion of the proposed groups now offer both full utility and discount choices dependent upon your necessities and inclination. Discount firms often give no guidance or research. However, this is always changing. They essentially transact your exchanges with no added bells or whistles. Since they maintain fewer items in their full aid partners, discounts charge much less for their services. They mostly give connected request passage aids. The human dealers at these businesses are paid a set amount to execute your changes. They don't request your business and they aren't commissioned. Discount brokers profit by working together in volume, competing for the most part on cost and the speed and trustworthiness of their utility. In a perfect world, whoever has the least costs and the best aids gets the most exchanges. In practice, it doesn't consistently work out that way. Personally, I push to do it yourself. I push the do-it-yourself investing method. I need every living soul to do their particular homework and settle on their particular choices, so I suspect discount specialists are indeed the course to go. I accept that you're equipped for the purpose of picking up whatever you need to know to invest effectively, and you can spare enormous requisition dollars in the technique. If you make it through this series of videos, I'm sure you'll have what it takes, and you will prosper as a result. Depending on the strategy you employ, you might support one broker over a different one. Here are a few focuses to recognize. The difference of making your trades fluctuates from broker to broker because each brokerage firm has a different pay scale and commission costs. Discount intermediaries like Scottrade, E-Trade, and TD Ameritrade charge less at the expense of mediocre client aid, an absence of exploration apparatuses, or slower execution of your requests, possibly prompting missed chances. Provided that you're emulating the buy and hold way of investing the long-term strategy and you only trade occasionally, requisition rates ought to be on your radar. However, you might as well weigh different components, especially customer service. Furthermore, If you're headed off to be a successful trader, broker fees can and will add up fast. Investigate discount dealers and find one to use that has a flat fee to help you make your exchange costs a little bit more manageable, a little easier to budget. Likewise, discover if a specialist's rate is altered or depending on the number of exchanges you make per year. Numerous brokers offer cheaper rates to dynamic traders. These are traders that are more active. If you need to exchange after the market closes, make sure you pick an aid that allows this. Nighttime trading comes with more risk, for example, less volume and more volatility. Yet, as is continually the case, with more risk comes more chances. The sorts of investment items you decide on is part of your investment strategy, so verify the specific products you need to exchange first and foremost. For instance, each broker will have access to the most generally exchanged stocks. However, many should not have access to daintily exchanged issues like penny stocks. Options exchanges are moreover well known. However, certain brokers have better or worse platforms for their individual options trades. So if you need to exchange options, get a clear understanding of the representative's options trading setup thoroughly in advance so you comprehend what you're getting. Likewise, don't overlook that options transactions convey an extra expense for each contract traded. So if you need to exchange options, be mindful of this and make sure to add those expenses to your trading costs. Assuming that you want to research, select, and purchase stocks without the help from anyone else, a discount broker that offers noteworthy research platforms will suit you well. Some discount representatives even offer an entire network for traders to swap their exchanges. However, my interaction is that these services are of limited worth. Nonetheless, if you feel agreeable settling on backing choices without help from anyone else, or essentially don't have any chance to put in the exploration yourself, perhaps a full utility specialist is indeed the right choice for you. Unlike rebate agents, full-service brokers will work with you on a financing technique, yet this generally and consistently has a go at fundamentally higher expense. Full service will usually allow for a more extensive assortment of products, venture guidance, and insight than discount representatives. They might give stocks, bonds, subordinates, annuities, and protection. In return, they charge respectably higher charges. Full aid agents solicit business and are usually commissioned. The method in which they get paid is not on how well your portfolio does, but by how often you trade. So this means that your full-service broker benefits when you trade more frequently and may urge you to do so when it's not necessarily in your best interest. This, as I'm sure you can see, is the main opposition for the use of a full-service broker. There are different elements to recognize as well. Most discount brokers keep their managing expenses very minimal by being online only, which implies that they don't have neighborhood locations. If you lean towards having the capacity to stroll into a nearby extension of your firm association for whatever reason, calculate that into your choice too. Also, you may want to check with your boss to see if particular necessities for employee investing. Hinging on your management's inclusion in securities or other money-related transactions, they might need you to adhere to a short list of brokers that they have specifically endorsed for their employees to utilize. For the sake of this discussion, let's say that you've chosen a broker, done your stock examination homework, and now you're equipped to make your first move and put in your first request. In keeping with my buy and hold methodology, there are just two terms you need to know: buy and sell. It sounds straightforward enough, and it doesn't actually need to get any more intricate for now. You're purchasing a stock in light of the fact it seems to be an incredible lifelong prospect. You'll intend to keep it lifelong, and you will only sell it if you need the cash or feel that it is more profitable to put its invested money elsewhere. That being said, there are many different specific order types. To verify you're not overpowered by the terminology when someone throws it at you, how about we get a load of most common sorts of requests? To start with, and least troublesome, are buy orders and sell orders. You essentially tell your broker what number of shares of a given stock you wish to purchase or sell. You can buy or sell at market, the overall business cost of the trade at that minute, or at limit, which means at a certain cost or less. For instance, you may put in a request for 100 stakes of business X at a cutoff of $140. This is to state that you're just ready to purchase these shares provided that you can do so at $140 or less. When you are selling stocks, you can additionally utilize a stop limit. Specify to your broker to sell your shares if they fall to a certain cost. Along these lines, in the event that you set a stop limit on Business X shares at 130, your representative will know to sell your stakes if they fall to or beneath that specific cost. You are the only one who makes the proposed stop limits. As we ought to see, the aforementioned could be extremely advantageous devices in managing and protecting the money you've invested. The overarching theme of this video is this: before you start speculating, before you start investing, you need a brokerage account. As an investor, picking a broker is perhaps the most important choice you will ever make. Here are 5 items you need to search for before you open your account. Number 1. Full-service broker versus discount broker. Discount brokers are intended for the do-it-yourself investor. Usually they will not offer strategic guidance for your investments. They will basically execute requests once you've chosen to purchase or sell a backing. In place of working with the same stockbroker, you will do the majority of your exchanges on the web, or depending on if you choose to phone in your request, you'll be routed to the first accessible broker who answers the telephone. Lately, markdown firms have been offering research that is comparable to the previously mentioned offered at the full-service firms. Some phenomenal samples of discount specialists are E-Trade, Scottrade, and TD Ameritrade. Again, these are only a few. In return for compromising the private contact that you would get with customary full-service representatives, you as an investor will be charged fundamentally less with the discount broker. Number 2. Commission fees. In spite of the fact that the greatest distinction in the middle of conventional markdown representatives is the expense of every transaction, distinction in commission fees between 2 firms of the same kind might be gigantic as well. One markdown dealer may charge $30 for every exchange, while an additional may charge no more than $8. In certain cases, the higher cost connotes preferable aid, snappier execution of your exchanges. That is, your purchase and sell requests are done in a shorter time and more advantageous. However, this is not constantly the case. That is why it is paramount to look around and look at firms before you open your account. Number 3. Minimum account opening balance and maintenance fees. Every intermediary has at least one opening prerequisite cost. Some are as cheap as $500, regularly around $1,000, and some are indeed higher. The general guideline is that you might as well have $1,000 when you head off to open up a record. Be cautious, however. Some firms might have low opening costs offset, however will charge you a support expense if your balance falls underneath a certain measure. Granted that the expense may be as meager as $5 for each quarter, it can subtly chip away at your venture's benefits if you're simply beginning. Keep in mind, $60 each year in upkeep charges on a $1,000 record offsets is equivalent to paying 6% in a premium. Number 4. Utilities, perks, research, and investment tools. No firm offers an identical set of tools, research, and miscellaneous add-ons to their clients. Some will permit you to quickly and easily log into your account online and print out a portfolio analysis. View the past 6 months' balance breakdown, check your unrealized and realized profits, and view yield records for the past few years. Alternate firms may not provide this, but offer astounding high-caliber research that you just couldn't get somewhere else. Provided that execution time is critical to you, look at the company's strategies. Plenty of online discount dealers vow to execute your exchange in 60 seconds or less, or your trade is free. Recently, numerous businesses have started off offering Visa check cards, which work similarly to credit cards. The contrast is, the cash you use is taken straight out of your brokerage account. Because of this, you have traits of a checking, savings, and money market account with a stocks, bonds, investment account. It may be gigantically favorable and can assist reorder your budgetary standards. Assuming that you are searching for an all-in-one with no all-in-one fix, a stake administration record may be a more magnetic choice than a more customary brokerage account. Number 5. Internet and online availability, interface, and ease of use. When you open up an account, go online and visit the site of every of the business firms you're thinking about using. Assuming that you plan on doing a great deal of your research or exchanging and trading on the web, the usability and the navigatability of the site is nearly as essential as the other profits and benefits that the aid advertises. Okay, That should cover the crucial areas you ought to consider when selecting your broker, what to keep your eyes open for, and how to actually perform your trades. Now let us discuss the fabled terms bull and bear markets. I'm sure you've heard of these terms thrown around with regards to Wall Street, even if you've never been involved in any sort of investing. A bull market is when the entire economy is incredible. Folks are finding jobs, GDP, which is gross domestic product, is developing, and stocks are climbing. Things are simply fantastic. Picking stocks throughout a buyer's business or a buyer's market is more straightforward since everything is on the rise. Buyer's markets can't keep going for eternity, however, and some of the time they can expedite unsafe scenarios if stocks get exaggerated or inflated. Provided that an individual is hopeful and accepts that stocks go up, he or she is called a bull and is stated to have a bullish viewpoint. A bear market is when the economy is awful, the crash is approaching, and stock costs are falling. Bear markets make it difficult for investors to pick gainful stocks. One fix for this is to profit when stocks are falling, utilizing a strategy called short selling. A different technique is to just sit out for a while until you feel that the bear market is nearing its end, just beginning to purchase in foresight of a positively trending market. In the event that an individual is a pessimist, accepting that stocks are headed off to drop, he or she is called a bear and stated to have a bearish viewpoint. The chickens are hesitant to lose anything whatsoever. Their terror overrides their necessity to make benefits, so they in turn just go to currency market securities or get out of the market entirely. As I have as of now let you know, you should never sink money into something over which you are prone to lose sleep over. You are ensured never to see any profit in the event that you escape the market totally and never take any risk. The pigs are high-risk investors searching for the one colossal score in a short time. Pigs purchase on hot tips without doing any research or homework. They get eager, greedy, and act on emotion in regards to their ventures, and they are drawn to high-risk securities without putting in the best possible time or venture to study about these investment vehicles. Expert traders love the pigs, and it's frequently from their misfortunes that the bulls and bears make all of their money. There are more than enough diverse investment styles and procedures out there. Granted, the bulls and bears are always conflicting. They can both profit with the alternating cycles in the market. Yet the chickens can see certain returns, however not a ton. The one washout in this picture is a pig. Verify you don't get into the market before you're really and truly ready. Be progressive and never put resources into anything you don't fully understand. When you hop in without the right information, contemplate this old money market stating: bulls profit, bears profit, yet pigs just work toward getting butchered. Again, lots of information we've just thrown out there. Always rewind the video, always watch it again. I hope you're taking notes. It's always a beneficial thing to do. It may seem like homework, but you are indeed learning. You're developing techniques and strategies for financial success. So, good luck.